All right, hey guys, this might be a little bit of a longer video. I want to unpack something that I see often in talking with new clients, talking with prospects, even existing clients, and that is this misunderstanding about what a controller would do, what a bookkeeper would do, what a CFO. These terms get thrown around interchangeably, and I want to kind of give you guys some clarity as you're making decisions around this stuff as to how you would evaluate. Let's talk about what each of these roles would do, and I'll give you some real life examples. I'll start with one. Got a client right now, I don't know, does 10, 12 million in revenue, really like struggling to get a financial statement out. And the reason is because they have people that they're saying are controller level, but are really like a clerk. What do I mean by that? If you do not, or somebody in your team does not have the ability to understand the balance sheet, better yet, understand when the balance sheet is inaccurate, which means they don't understand debits and credits, they're not an accountant. Okay, so I could say that 10 times over. If they don't understand the balance sheet, what accounts should be credit balances, what accounts should be debit balances, when things should be positive, when they should be negative, they don't know the balance sheet, they don't know accounting, they're not an accountant. Therefore, they cannot be your controller. Pretty simple. I'm seeing this often. I'm seeing this with a client right now. The reason they can't produce a financial statement is nobody can tell them if the data is wrong because nobody understands debits and credits, okay? That's a controller versus like a clerk. So many of you have elevated somebody who can do accounts payable and accounts receivable, meaning bill people and collect from people, but that doesn't mean they understand the other half of the data. See, what a lot of people don't get is accounting is a double entry system. When you do something, i.e., you create a bill, you also do another thing, right? So when you create a bill, accounts payable goes up, but something else goes up. And if you don't understand the something else that goes up or down, you don't know if it's inaccurate, you're not an accountant, right? You're not a trained in debits and credits. You should not be a controller. So what is the takeaway here, at least on the controller piece? If you have any level of sophistication in your business, fixed assets, you borrow money, you have revenue recognition where people maybe pay you in progress payments, or you need to recognize revenue, not just when you invoice people, but maybe over time, percentage of completion comes to mind. You have accruals, meaning payroll hits, let's just say on the 3rd, but it's really for payroll from like the 27th through the 3rd. You need to accrue some of that in the prior month. If you have any of that kind of stuff, you need controller level help. You need somebody that is an accountant who can understand that. Okay. So that's understanding the difference between somebody that can enter bills, reconcile a bank account, etc., and an accountant who understands the balance sheet. Okay. CFO controller. Let's look quick. A controller is generally rear view mirror, right? They're getting your books up to speed. They're making sure the balance sheet's good in the rear view mirror. Good controller can also do a little bit of forward thinking. And that's the distinction between a controller and a CFO. CFOs want to take good data, historically good data, and act on it or advise on it. So forecasting, budgeting, planning, equity versus debt, should we buy versus lease, projections out into the future, margin analysis, all things pointing in the future would be CFO. A good controller can do a lot of them, but maybe not all of them. And so when you're thinking controller versus CFO, you're really thinking reactive versus proactive. And a really good controller, maybe at a company that's not huge, could probably do most of the CFO level stuff. Bookkeeper or clerk maybe could use those interchangeably. Controller, CFO, those are the distinctions. But I would tell you, if you have any level of sophistication, you borrow money, you have prepaid insurance, you have long-term debt, you borrow a lot of credit, you have revenue recognition, you need accruals, you need either an accountant in-house or you need somebody on the back end reviewing your team's work and making adjustments. So I hope that helps. I see this a lot. I see the terms confused a lot. I was in a client's office the other day. They were hell-bent that they needed a CFO. And I said, you guys don't even have a balance sheet right now. Like, you don't even reconcile the bank account. All you do is bill and pay people and pay your payroll. You need to get your books in order so that a CFO could act on that data and advise you. So hope that helps you guys. Anyway, if you got a question or a comment, drop it below. I get this question a lot, so I wanted to unpack it. So thanks, you guys. See ya.